This is the FM Gold channel of All India Radio. In the program News Analysis, now we bring you a discussion on Sovereign Wealth Fund to tap natural resources overseas. The participants are Rohit Bansal, CEO, India Strategic Group, and Arjun J. Chaudhary, economic journalist.
Rohit Bansal, the government's plan to introduce a sovereign wealth fund, not only to secure energy assets abroad but also to stabilize the currency. What a sovereign wealth fund is, and does India have the capability to set up such a wealth fund? We know that Russia has already tendered its assistance in this regard.
I don't know about the Russian part, but what I do know is that sovereign wealth funds aren't unique to the world anymore. Led by Norway and then Saudi Arabia and the United Arab Emirates, the Singaporeans have a large sovereign wealth fund. So basically these are government funds which are in a sense consolidated and put under an efficient vehicle with a professional management of funds. And they are typically not used within but outside the shores of a particular country. So these are typically used to acquire assets, including those which will be longer term and more strategic in nature. And they are also, in many cases, like in the government investment company in Singapore or Temasek or the Abu Dhabi investment funds, they are managed by professionals who are not necessarily even from the same country, but they are expats who have no incentives and commissions even.
Apart from the management structure and the incentives, the government is looking to name this as the India Overseas Investment Corporation, which would be under the control of the Ministry of Finance. So do you see maybe government officials being a part of this wealth fund in terms of its management and return and acquisition of overseas assets?
I hope not. I think this will be a mix of talent. By all means, some of our IIT, IIM, IAS kinds are extremely talented and they have done some of this work at a scale which may be somewhat different, but for sure government has resident talent. But my hope and earnest wish is that there is a healthy mix of the outsider element, and therefore professional and somewhat more commercial approaches are also available. And there are a lot of people in the queue globally to come back to Mother India and work for the government, work for such a corporate entity. And I hope that a healthy mix will be there rather than being a parking lot for serving bureaucrats alone.
Well, you spoke about the long-term benefits of such a sovereign wealth fund, not necessarily if India creates it, but the short-term goal clearly is to stabilize the currency, which is right now trading between the 63 and 65 mark. Do you see such a fund actually ensuring that the rupee trades in the below 55 mark now?
I think it will be a travesty to park this fund in a psychological zone of merely managing immediate and tactical objectives such as the rupee, etc. I think the concept came in, I'm privy to certain background if you permit me, almost 7 years back when President Kalam had talked about the need for such a fund. So there was no question of linking it only to the rupee and the immediate concerns herein. The idea has been discussed at the highest levels. Also, the Principal Secretary to Prime Minister, Mr. Pulok Chatterjee, is apparently rather keen about the strategic imperative inherent in having a long-term, externally oriented sovereign fund. And very simple terms for listeners, this is about putting together surpluses parked in various public sector undertakings, for example, and putting them in one place so that these can be then leveraged as a pure illustration. Say BHEL, it is fighting for contracts in a given African country, competing with the Chinese. Now the Chinese come and not just offer a boiler, which we make perhaps much better and perhaps even cheaper, but their EXIM institutions or their sovereign guarantee funds, and they have two of the largest in the top 6 in the world. Those are also piggybacking this boiler contract, and they offer it dirt cheap and link the financing to a very easy interest rate, whereas the Indian firm goes and competes at the dint of their merit, their quality, their after-sales service. But said African country, or why African, any country, is also looking at the financing package, which is at the moment not backing our PSUs. So at the one level, I'm told the PSUs are very shy to part with their profits and or other surpluses and put it in such a fund. On the other, certain large, big-ticket contracts and acreages or concessions in mining are going to come much more easily if they are backed by such a fund and not necessarily stabilizing the rupee as you alluded.
Well, apart from principal advantage of financing overseas acquisitions and, like you said, piggybacking overseas acquisitions by PSUs based out of India, there is also easier mode of clearances and approvals sought by a single window clearance system, which is more practical under a sovereign wealth management system rather than what is already at present. Would you agree with that?
Well, I would say that the inherent difference between existing and well-managed and large sovereign funds is that they are typically in current account surplus countries. So if you don't have a current account surplus, how on earth are you going to really scale up your ambitions to any measurable and credible levels? So my sense is that two very important changes that are inherent besides getting in professional talent, coexisting with the absolute top-class manpower we have within government already, is to unshackle them and to leave them outside the morbid fear of audit processes and the capability to make a mistake. Because unless you are willing to make a genuine mistake, you will not take any major entrepreneurial decision.
Well, clearly that is a core issue in any government acquisition or procurement
Not
process
necessarily,
itself.
because we are not the only sovereign fund, my friend. We have Norway, we have Saudi Arabia, we have Qatar, we have United Arab Emirates, we have Singapore, we have China or Canada. So these 6-7 sovereign funds are equally accountable to the exchequer, to their public sector units and their fund managers.
Well, that's an interesting point you raised. So the size of the fund is also a factor. $10 billion US dollars is being touted, and there are reports saying that funds will be raised through rupee bonds over a 15 to 20 year period with a sovereign guarantee. And they will not be borrowing from the Reserve Bank foreign exchange reserves. What is your view in terms of the size of the fund and how it will be financed?
Pretty small, because if you see Norway over 600 billion. So you have to see context when you say 10 billion, which may be very great by our present way of looking at ourselves. But for a country like India, this is a good beginning point. I think one must compliment those who have thought of it, who are putting it together. It is the duty of every nationalist Indian to watch it very carefully and support it in every possible way, including making sure that the clouds of doubt and self-constricting decision-making system does not cloud this entrepreneurial initiative. But remember, every sovereign fund makes 100 bets and only 90 of them, in the best case, are going to work. But what happens to the remaining 10? That's something which we have to think through and not make these people scared and paranoid about any decision.
The average citizen was clearly concerned that if you do create a sovereign fund like this, then the money will be dipped into the foreign exchange reserves. Now reports are coming out that will not be the case. But there is always that inclination and the option with such a fund to ask the RBI to part with funds for these kind of acquisitions.
I doubt whether RBI will be party to this. My own sense, talking to those who have access to this document which has been alluded to in the newspapers today, is that it is mainly a consolidation exercise of surpluses parked within individual public sector units. They have to be convinced to put it in this sovereign fund, and in turn certain mining or exploration rights or any of these things which the Exim Bank of India, for example, competing with the Chinese, are unable to do. Today, India is importing billions of dollars worth of telecom equipment, power equipment from China. This kind of a fund is already there in China. Two of them together worth about 600 billion itself. Now, those are the kind of levers and subsidies or cheaper financing models that China is able to piggyback, that the entire Indian industry is saying, oh, I want a Chinese boiler or I want a Chinese telecom equipment, rather than what India makes perhaps better and better serviced. So I think this kind of a facility, once the rules of the game are very transparent, there will be enough people who will lobby against it. This is for national interest, and Mr. Pulak Chatterjee deserves all the credit for sticking his neck out and making sure some of this is discussed and then hopefully decided.
Well, you spoke about those countries with surplus current account, within our deficits anyway, the surpluses. But if you look at those who look to buy the bonds issued by such a wealth fund, according to the report, says state-run entities, banks and financial institutions who are looking to subscribe to it. So clearly, it is purchase of these bonds are from state-run entities themselves. How do you see such a fund incentivizing other organizations to subscribe to these kind of bonds?
Some of it will have to be shepherding gently. So you don't have to convince everybody, because if you have a vision, if you have a certain national interest and imperative, it is not important to convince everybody. My sense is that a few big ticket people, companies which are truly going to benefit from this collaborative architecture should be brought on board, their chief executives and their boards. Some of them are Maharatna companies. So therefore, they have to be also board managed in their decisions, and the conversation with the chairman of that company will not suffice. So I think it is important for the finance ministry to not simply create the structure and leave it to the concerned chief executive and the group, but to make sure that this is created in a manner that those companies find meat on the bone for this particular project and see the national imperative. I mean, we are classically accused of being tactical in our responses.
Invariably, when bonds are issued, then to make it competitive, coupon rates are increased. The reports say that it would be more than the treasury bonds, so that there are more buyers for these bonds that will help finance any acquisition of such a wealth fund. FIIs have shown a great interest in a bond market, but they're also exiting in a big way. That has created a fair bit of volatility in the capital market. How do you see both public and private entities investing safely as far as the wealth fund is concerned, so that the acquisitions wealth fund can take can actually go ahead?
What the present scenario is, and the surpluses parked in the public sector undertakings, etc., this is certainly more safe, because this is truly and officially sovereign backed, unlike that particular funding. And the other thing is that ultimately we have to see that this is a very small amount of money, and it will only buy us that much, and there will be some mistakes as well which we have to guard against. But essentially this is a national objective, an imperative. I think it's coming a little late in the day for the government's life. We don't have the matters very much in our favor. Probably 3 years back or 2 years back this would have sailed. But this is also true that because there is a certain amount of crisis, some new ideas, there is a space that has suddenly come in. But finally, on the point on FIIs, the FIIs are exiting for the moment essentially out of the arbitrage that they are not able to get from the dollar, and therefore they are showing certain signs, which is fine because they are day traders. They are not long-term investors in the India story. But finally and fundamentally, we have to be in Australia, we have to be in Africa, we have to have skin in the game in the Central Asian context, in Russia. So this hasn't come a day too soon is what I like to say.
Well, our discussion has centered around the Consolidated Sovereign Wealth Fund. But when you talk about acquisition of natural resources overseas, why don't you make it more sector specific? And why do you need a consolidated fund? You can have a sector specific fund, and that would be in line with ministry objectives as well in terms of acquisition and ensuring security not only in energy but food security as well.
Well, we have very limited information in the public domain right now, and this is basically from what the newspaper Times of India has written is on the conceptual stage, and I'm sure a lot of people will contribute to what's finally emerging. But within the present experience that we have in the 6-7 countries I named, for sure within the sovereign fund of Norway or sovereign fund of Singapore, there are verticals in which funding is deployed around the whole cluster of national objective, return, and the risk element inherent. And someone at the top oversees the entire architecture. In many cases, these are countries which are not pure democracies, but are monarchies. In case of Qatar, UAE, and also Saudi Arabia. So therefore the sovereign trusts the cousin who is managing it completely. In our case, we'll have to have a far more professional approach, but I assure you there will be sectoral manifestation. It can't be left out only to the ministries which we have so far.
Thank you.
You were listening to a discussion on Sovereign Wealth Fund to tap natural resources overseas. The participants were Rohit Bansal, CEO, India Strategic Group, and Arjun J. Chaudhary, Economic Journalist. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website newsonair.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.